with Mahabaleshwara MS, who is the MD and CEO at Karnataka Bank, to talk about the jump in the profits as well as the healthy NII growth. Thank you so much for taking time out. Now, just walk us through the outlook in terms of Karnataka Bank, in terms of how you are looking at your overall deposit growth, because it seems like everyone is chasing deposits with deposit growth trailing advances growth. What is your outlook?
Yeah, very nice. See, madam, if you just go through the overall performance of our Karnataka Bank for the Q3 of the current financial year, I must say that it has not only been impressive but also consistent. There has been a consistent and continuous effort to ensure a quality business and to further improve the fundamentals. When I say the quality business, as you have rightly pointed out, yes, banks are facing the liquidity-related issues. But for us, as our CD ratio is somewhere around 73 to 75%, we have not yet facing that type of issues. But fortunately for us, our CASA is growing well. In fact, it has grown at a rate of around 9.95%. And as of now, my CASA is at 31.91% as against the 31.30% corresponding previous year. Credit growth is slightly higher than that. It is at 19.51%, so YOY. And of course, the quality has been one area, the asset quality, that has been engaging our attention. And in that area also, we have been able to further improve our position. In fact, our GNPA, which was at 4.11% about a year back, is now at 3.28%. So also the NNPA, which was at 2.45% at 1.66%. In nutshell, what I am highlighting is that the earnings have improved significantly. That is, NII has shown a growth of 34.07%. Operating profit has also recorded during this particular quarter a growth of 49.27%. This is as far as the quality business that we have been focusing. In the past also, I have shared with you, with your channel as well as to our investors, that we have been consistently focusing on the fundamentals. All the fundamental ratios, I must say that, are at a new high.
No, that's understood. But I just want to, move further and get in more perspective on your numbers, because your cost of deposits and cost of funds haven't inched up compared to your pre-COVID levels. Are you seeing a meaningful increase, and how is that going to impact your NIMs?
Yeah, see, cost of deposit, some upward movement is there, but it has gone up by cost of deposit is gone up from to 4.54% as against 4.46% as of September. So September to December, it has gone up by 4.46% to 4.54%. As far as the yield on advance is concerned, it has gone up from 9.24% to 9.45%. So that being the case, so the yield on advances, the increase in the yield on advance is much higher than the cost of deposit. So we have been able to maintain our spread as far as the returns are concerned.
Fair point. But does this also factor in your yields? Your yields are steady in a rate hiking cycle. What's the reason behind that?
Yield on, see, there were certain areas of reversal of the interest also. So that it may be one of the things. But in the current month, that is during the January and onwards, it has started improvement in the yield aspect.
Okay. I want to specifically talk about your loan growth as well, which has come in at 12.5%, which is also well below, one would say, the system or the industry growth. Are you being cautious? And then what is your Fy23 as well as 24 guidance?
All bankers would love to be cautious, because it is definitely not a time for an aggressive exposure. but we are taking utmost care. Especially that is the reason why our stress in the portfolio is also coming down. That doesn't mean that we are overcautious. I should say that we are reasonably aggressive as far as the credit side also. In fact, I have been focusing more on the agricultural credit, which now constitutes about 16.12% of our GBC, with an YOY growth of around 9%. Contractors exposure also, because a lot of infrastructure related activities are happening. So our growth rate has been at around 16.25%. Infrastructure is one area. Of course, as far as infrastructure contribution is concerned, it is constituting around 1.92% of our loan book. But last year we have grown at a rate of 37.69%. Being a south-based bank, I'm also more focused on agri gold, where the growth rate has been 8.38%. So, of course, along with that, the car loan, home loans are other areas. So, wherever we find that there is a good growth opportunities, we are taking the informed credit exposure for those particular sector. And going forward, as I have already said, of course, even though for the current year it is the 12.51% growth, for March, I'm optimistic that we will be able to surpass minimum 15% YOY growth in the credit as well.
Mr. Mahabaleshwara, a pleasure having you on the show today on ET Now. Thank you so much for taking the time
Thank
out.
you. Thank you.
Let me now welcome on board KK Mistry, Vice Chairman and CEO at